Hello traders, welcome back. In the previous lecture, I have discussed about how to detect and trade a downtrend market when a downtrend is just started to form. The previous video was a graphical demonstration of the method, and in this lecture today, I will show you the method with real chart examples. So let's start. As you can see, this is a day chart of New Zealand dollar versus Canadian dollar, where you can see that the market is trending at the upward direction at the moment on this chart. And as you can see, the bearish pin bars high is the current market high of the time on this price action chart. Now, if price goes down and form a downtrend momentum by making continuous lower highs and lower lows, then the pin bars high will be our first lower high level. So let's wait and see in which direction the market ultimately goes. And as I uncover some more price action on this chart, you can see that price falls for more than 350 pips in the next few days. And you will also notice that a bullish candle has appeared at this bottom, where the candle's lowest price is the current market low and the candle's lower shadow indicates bearish rejection, which predicts that the market will rise again towards the upward direction after this bullish candle. That's why if price goes up after this bullish candle, then we can tell that the low of this bullish candle is the new bottom. And if a new downtrend momentum forms on this chart, then we can name the highest price level of this price action chart as lower high level 1, as well as the current bottom level as lower low level 1. Now let's see if price goes towards the upward direction and make another top level by staying below the previous top, so that we can name the new top as lower high level 2. Now if I uncover some more price action, then you can see that price rose up but could not break the previous top level. You will also notice a strong bearish engulfing candle at the top with an upper shadow, which indicates the rejection of bullish momentum and hence predicts that the bullish rally towards the upward direction is now over and the market is going to fall again. So the highest point of the engulfing candle is a very top level if price falls after the engulfing candle. And because the top has formed below the previous top level, we can call this top as lower high level 2. So until now we have 2 lower highs and 1 lower low level. We only need another lower low level to confirm the downtrend momentum of this market. Now if you trade short after this bearish engulfing candle, then it would be a risky trade entry since we are still not confirmed if the market will go more down and the uptrend will end up. Chances are huge that price will get a pullback towards the upward direction and hence the uptrend will continue. If that happens, then your short trade will hit the stop loss. That's why we should not trigger short trade entries before we have the confirmation of the end of the uptrend momentum and as well as the beginning of the downtrend momentum. So let's just wait and stick to the rules. Now let's see if price falls at the downward direction and make a new bottom by breaking the current bottom level so that we can name the bottom level as lower low level 2. And if I again uncover some more price action, then you can see that price falls down and broke the previous bottom level. You will also notice that a strong bullish candle has appeared after the bearish rally, which indicates that the bearish momentum is getting weaker and the bullish momentum is getting stronger. It also indicates that the bullish candle's low is the new bottom level and price will rise after this bullish candle to make a new top level, which we will call as lower high level 3. So if price rise up and create a new top below the previous top level, then we can name this bottom level as lower low 2. And if that happens, then that means we have 2 very lower highs and 2 very lower lows in this price action chart. So we can now assume that the downtrend is now confirmed. Now we will search a strong bearish candle at the upcoming lower high point to trigger short trade entry. So let's wait for the next lower high to form so that we can trigger our very first short trade entry on this newborn downtrend market. And if I uncover some more price action, then you can see that price rose up and has retraced 50% of the previous rally, where we have a pin bar with a bearish head or a bearish hanging man candlestick pattern at the top. This bearish pin bar or hanging man does not show any strong bearish momentum because the lower shadow or tail of this pin bar indicates that there are still some good amount of buying pressure exists in the market where the buyers fought very well against the sellers. That's why the long lower shadow or tail of the pin bar indicates bearish rejection and the existence of strong buying pressure. So we should not jump into the market right at the moment. Rather, we should just wait for another strong bearish candle to confirm the upcoming strong bearish momentum on this downtrend market. So if we wait for the next few candles to form, then you can see that another bearish pin bar or hanging man candle has appeared right after the previous bearish pin bar. So still we can see some bearish rejection through the long lower shadow of the current bearish pin bar. That's why we should not trigger any short trade entry right now, since there's a good amount of bullish momentum still exists in the market. Nor we should trigger long trade entry because we don't buy in a downtrend market. So let's just wait until we have a strong bearish candle which will offer us to take short trade entries. Now if I uncover some more price action, then you can see that two back-to-back strong bullish candle has formed after the bearish pin bars. So if we traded short at the previous pin bars, then our stop loss would have got hit. So price has retraced almost 80% of the previous rally. At this stage, we need a strong bearish candle if we want to see the newborn downtrend to sustain for more time. Because if price continues to rise up and break the previous high, then chances are huge that the previous uptrend will resume again, and hence our newborn downtrend will end up without giving the opportunity to trade short. But we got no hand on the fate of the market. So let's just wait again until we see a strong bearish candle to form below the previous lower high level, so that we can place our first short trade entry on this newborn downtrend market. And if we wait for another candle to form, then you can see that finally we got a big bearish engulfing candlestick pattern below the previous lower high level, which has engulfed even the previous two bullish candles. So now there are no confusion about the strong bearish momentum on the market after this bearish engulfing candlestick pattern. So the top of the engulfing candle is the lower high level 3. And as I told you before that the third lower high level is the first trading point of a downtrend market. So let's trigger our first short trade entry at the closing price of the bearish engulfing candle, then set the stop loss around 20% below the high of the engulfing candle since it's a big candle to trade, and then set the initial profit target for at least twice the size of the stop loss. So now that we are all set, it's time to get relaxed and wait for the profit target to get hit. So let's wait and see if we have won the trade or not. And as I uncover some more price action, you can see that our targeted profit level got hit. So we had confirmed a downtrend momentum and then triggered short trade entry at the very first short trade opportunity on that downtrend and finally won the trade. And all that has happened using the most reliable swing trading strategy. It's very simple and easy to detect and trade the trends if we maintain all the rules of swing trading strategy. Now if I uncover the rest of the price actions of this chart, then you can see how nicely the market has moved on its trend direction. You could have get the chance to enter in this downtrend market for several times. Even if someone missed the first trade opportunity, he or she can get it from the second one. So there are always so many valid swing trade opportunities in the market if you can spot those as a swing trader. Although this is an almost perfect trading method to trade the trends, but there are still lots of other things that you have to learn in order to filter the invalid trade setups and hence reducing the losses and maximizing the profits using swing trading strategy. Until now in this section, you have learned the basics of swing trading strategy where we traded the market by just analyzing the price actions. We did not use any indicators or other tools for extra level of confirmation of the trades. So from the next lecture until the end of this section, you will learn some more advanced techniques which we will integrate with our swing trading strategy so that you will have more accuracy in your trades and get maximum profit from every single trade that you will make using swing trading strategy. So that's all for today. We'll see you in the next lecture. Till then, have a nice day and goodbye.